Bitcoin, ETFs, and the new digital dollar, the next financial revolution. What if I told you that the US dollar as we know it is changing right now? Between Bitcoin ETFs going mainstream, banks testing blockchain, and the government experimenting with a digital dollar, we're standing at the edge of a financial revolution. This isn't sci-fi, it's happening in real time. Let's break down how Bitcoin ETFs, crypto regulation, and the new digital dollar could reshape money, power, and your wallet. Section 1, the Bitcoin ETF boom. After years of rejection, the US finally approved Bitcoin ETFs, and Wall Street jumped in fast. Now you can buy Bitcoin exposure from giants like BlackRock, Fidelity, and ARK Invest, all without touching crypto wallets or seed phrases. Why does that matter? Because it gives everyday investors and institutions a safer, regulated way to hold Bitcoin, just like gold ETFs did back in the 2000s. ETFs make Bitcoin feel legit in the eyes of traditional finance. Pension funds, hedge funds, even retirement accounts can now dip their toes in. And here's the kicker. Every ETF dollar that flows in buys real Bitcoin. That's massive demand, and Bitcoin's supply fixed at 21 million. So, as Wall Street piles in, Bitcoin becomes not just digital gold, but the foundation of a new asset class. Section 2. Why Wall Street suddenly loves Bitcoin. CEOs like Larry Fink, JP Morgan, and Morgan Stanley on screen. Narrator. Remember when the big banks called Bitcoin a scam? Fast forward to today, they're buying in. Why? Because they see blockchain technology as a solution to their biggest problems: settlements, transparency, and speed. Larry Fink from BlackRock called Bitcoin digital gold. Even JP Morgan, Bitcoin's biggest critic, is now building its own JPM coin for instant transfers. The message is clear. Crypto isn't just for Reddit traders anymore. It's becoming part of the system it once rebelled against. Narrator. While Wall Street is embracing Bitcoin, the US government is testing something even bigger: a central bank digital currency, or CBDC. The digital dollar would be programmable US money issued directly by the Federal Reserve. That means no paper, no cash, just code. Sounds efficient, right? But it comes with major questions. Privacy. Will the government be able to track every transaction? Control. Could spending limits or taxes be applied automatically? Freedom. What happens to cash-based economies or financial independence? Benefits versus concerns. CBDCs could make payments faster and cheaper, but also raise the scariest question in modern finance. Will money still be free, or will it be programmed? Section 4. Bitcoin versus the digital dollar. Here's where it gets wild. Bitcoin and the digital dollar are total opposites. Bitcoin is decentralized, borderless, and limited. The digital dollar is centralized, controlled, and unlimited. One empowers the individual, the other empowers the system. But both might coexist, one as digital freedom, the other as digital order. If that happens, you could see a world where your paycheck is in digital dollars and your savings are in Bitcoin. Section 5. What it means for you. So what should you do about all this? Start learning. Even if you never buy a single Bitcoin, understanding how digital money works will soon be as basic as knowing how to use email. Watch what banks, fintechs, and the Fed are doing, not just what they're saying. And most importantly, diversify, because the financial world of 2030 won't look anything like today. We're witnessing history. From gold to paper to code, the evolution of money never stops. The question is, will you be watching it happen or building your place in it? If you found this breakdown helpful, hit that like, subscribe, and drop a comment.